India heads into the union budget with a strong growth signal. India's GDP growth for fiscal year 2026 is estimated at 7.4%, driven by twin engines of consumption and investment. It reinforces India's position as fastest growing major economy for the fourth consecutive year. These are the key takeaways from the Economic Survey 2025-26 tabled in Parliament by Finance Minister Nirmala Sitharaman. Looking ahead, the survey projects real GDP growth of 6.8 to 7.2% in FY27, while estimating India's potential growth at around 7%, even as the global outlook remains uncertain. The survey makes it clear that India's growth story remains largely domestic. Private consumption grew at 7%, accounting for 61.5% of the GDP, the highest share in over a decade. Low inflation, steady employment, and strong agriculture seasons supported rural demand, while urban consumption also improved. Investment has also gathered pace. Gross fixed capital formation grew 7.8%, holding at 30% of GDP, supported by sustained public infrastructure spending and early signs of revival in private investment. On the fiscal side, the survey points to steady consolidation. Centre's revenue receipts rose to 9.2% of GDP in FY25, backed by higher tax collections and better compliance. Income tax filings increased to 9.2 crores, while GST collections touched Rs 17.4 lakh crore between April and December 2025. Public investment remains a key pillar of growth strategy. Government capital spending reached 4% of GDP, even as overall debt to GDP ratio declined by more than 7 percentage points since 2020. The banking sector also continues to strengthen. Gross non-performing assets fell to a multi-decade low of 2.2%, while bank credit growth accelerated to 14%. India's external position remains comfortable. Foreign exchange reserves rose to $7.1 billion. Exports reached a record $825 billion in FY25. Inflation stayed under control as average CPI inflation stood at 1.7% between April and December 2025, the lowest since the current inflation series began. Even agriculture benefited from a good monsoon. Food grade production rose to 3,577 lakh metric tons. Manufacturing also showed signs of recovery in the first half of FY26. Beyond the numbers, survey offers a clear message on how the government sees the road ahead. It argues that state must become more flexible and responsive, shifting away from rigid regulation towards policies that enable innovation and quicker decision making. The survey also cautions that strong macroeconomic numbers alone no longer guarantees protection from global shocks. The survey's conclusion is simple but firm. India must pursue growth and resilience at the same time. In its words, the country must run a marathon and sprint simultaneously.